Good morning, all. Very warm welcome to our webinar, Staying Ahead of the ESG Curve, presented to you by inlumi and Oracle. My name is Arjan van Eyck, and I work for inlumi, and I'm here to open today's webinar, but I'm also looking after the questions you might post in the Questions tab that you can find on the right-hand side of your screen. Remy, if you can start the presentation. So for those who don't know us, inlumi, we are an end-to-end EPM service provider with 14 offices across Europe, Africa, and the Middle East. We've been servicing over 900 clients over the past 2.5 decades. And Oracle, of course, an internationally leading software vendor with Oracle Cloud EPM existing over 10 years, recognized in the Gartner Magic Quadrants, also providing over 8,000 clients with monthly new features and active user base in the Cloud Customer Connect user community. So that's a little bit about us. Maybe the next slide, Remy, before I'm handing over to you. So we have two speakers today. We have Remy Bos, who works for Oracle with sustainability reporting as expertise, and who has also led the development of the sustainability solution within Oracle Cloud EPM. And we have Mark Smits of inlumi. He's our own sustainability advocate and Oracle team lead. Remy will update you on the latest about ESG, and Mark will provide you with a demo on how Oracle Cloud EPM can help you resolve your ESG requirements. There's an option to post questions in the chat, but we'll try to answer them at the end of the session to make sure that we can cover all the topics in the presentation and the demo. And then for now, I want to hand over to Remy, who will talk you through the further agenda of this inlumi and Oracle combined webinar.
Thank you, Arjan. Hi, everyone. Also, thanks for having me, Arjan and Mark. It's good to be here. So for today on the agenda, I wanted to open up the subject a bit to talk about what's been happening in the regulatory landscape, especially over the last weeks. There's been quite some movement around this topic. Then I also thought it'd be interesting to show you a bit of how are the companies within the European Union reacting to all these regulations, and sort of who's at the forefront, who might be sort of still lagging a bit in the back, and what we can learn from all of that. Also talk a bit about the challenges to look forward to now that we sort of know what we have to report and when. Then how do we prepare? And that is all to set up for the demo, which Mark is going to provide. And then, as Arjan said, we're going to end up with Q&A. Please feel free to just post any question you have. We can pick them up at the end. So let's get started. Now, to anyone here, it's probably not a surprise that over the last couple of years, we've grown accustomed to this letter soup of standards and frameworks and guidelines. And every other year, there would be a new group saying something about sustainability reporting and how it should be relevant and reliable and comparable in nature. But that actually made sort of the landscape a bit more complex, because they thought a little bit different about the timelines on which we needed to report, the boundaries, what is material to a business, even where we reported it, and how we tag that data to then maybe share with external stakeholders. Of course, audit, also a big topic, with limited assurance now being the prevailing sort of method. Reasonable assurance was in discussion at one point. And of course, the scope, which I will say a bit more about, because 2 years ago, when the CSRD finally materialized, we had a scope of about 50,000 companies, and that has now been reduced quite significantly since yesterday. So what about yesterday? Well, the EU Parliament and the Council finally reached a provisional agreement in the omnibus trilogues. So if you remember when CSRD came out, and you can kind of see that in the table to the right, on the 26th of February, already European Commission came up with an omnibus change to the regulation and sort of reduced the scope by increasing the number of FTEs you would need to meet the threshold for CSRD reporting. Then in June, the Council of the EU came out and said, well, yeah, we like that 1,000 FTE threshold, but we're going to up the ante on revenue to 450 million. And then just now in November, the parliament came out, they found a center block with the right and said, well, no, we're going to increase or reduce scope, but increase the threshold even more to 1,750 FTEs. And of course, the topics there underneath as well, but these were the main ones for the scope. Now, yesterday, they finally came to a preliminary agreement, a provisional agreement, if you will. And so we've got some more certainty around the scope. And I've made that green in the table. So we landed on 1,000 FTE threshold, which, like I mentioned earlier, reduces the scope from 46,000 to 4,800 companies. For the CSDDD, CSDDD, the due diligence directive, that now has landed at about 1,300 firms. Now, there are some smaller revisions and additional exclusions like financial holdings and some further delays for the reporting timeline. But finally, we're getting some clarity around the big reduction from the omnibus mechanism. Now, if you remember, under the CSRD, so under the Corporate Sustainability Reporting Directive, there were the sustainability standards, the reporting standards. Now, back when it first came out again, like a year and a half, 2 years ago, the ESRS, the reporting standards, had about 500, way more, over 1,000 data points, which you could be reporting towards. But again, that got pulled into the omnibus regulation. And around September, the guys from the Sustainability Reporting Navigator, which is a group I would welcome you to visit online. I put the source at the bottom right here. They did an analysis of what the actual reduction would be. And they said, well, looking at all the companies that have reported until now, the total reduction in data points would be approximately 50%. And mostly, actually, these are qualitative data points. The quantitative data points actually only dropped by 30%, already sort of pinpointing that in terms of the things we have to gather for, as in quantitative data and the analysis and the transformation of that data we need to do is still largely there, even in the July revision of the Sustainability Reporting Standards. But now what happened at the beginning of this month, the 3rd of December, the EFRAG, who's responsible for the standards, came back to the council and said, we've listened to all the feedback, we're going to reduce even more. So on the back of the July 57% reduction, we're going to reduce to 61. Also, we've added clearer guidance around the double materiality assessment. There's going to be less pressure on data collection, but more on estimation, and some, again, reliefs, which now also made it into the agreement. I don't expect a major change with respect to the earlier revision, so that will still largely be intact. And you can see that on screen. Oh, apologies. You can see that on screen with the bars here, is that they look like they reduced significantly, but in fact, most of the quantitative data points are still there. So a bit about what's been happening, the state of play. Now you can see that right now, also from the Sustainability Reporting Navigator, about 700 companies have reported. Now leading the pack are the financials, infrastructure, and resource transformation. That's everything from energy to manufacturing. And France, Germany, and the Netherlands are leading the pack in terms of countries. But even the UK and Switzerland are reporting using the ESRS. That means the first version of the ESRS. But also to the right, you can see how big in the first version that reporting had become, right? So from 23 to 24, environmental reports had almost 60% more words. Social, 65% more words. So you can see how big these reports will have grown. That will now also be reduced. So beyond CSRD, of course, in the EU, like I mentioned earlier, the various letter soup, we have non-CSRD reporters. Now, funnily enough, I was in Stockholm earlier, and so I had a chance to look a bit more into Sweden. So here again, financials leads the pack, resource transformation, but now consumer goods, and leading the pack, Germany, Sweden, and Denmark. But even when you look at Sweden in this case, is that even the companies that are now not yet reporting full CSRD, they are saying we are preparing to. So I think 95% of the companies of these 29 Swedes, they said, well, we're not there yet, but next year we'll definitely move towards CSRD. So this is just, I would say, a stepping stone. But you can see that the majority of large organizations are moving. Now, a bit about the challenges to look forward to. When all is said and done, like I mentioned, when we know what to report, where to report, how to report, we know the scope, etc., data quality and availability is still the number one issue. Getting sufficient quality data to do carbon accounting and environmental reporting is quite difficult. Carbon accounting itself, I put on screen as well, because it's very tough, I hear from companies, how to figure out which emission factor to match up with what, say, activity data. Regulatory compliance, I put on screen as a challenge because it goes well beyond the EU. Many international companies will have the CSRD, will have IFRS, will have CDP, and all the other parts of the letter soup combined, which they need to report to. So they need to find a way to harmonize this time. And then integrated reporting, because often non-financial information or sustainability information does not mean as much as if it were combined with financials, right? You really want to know, if I invest in certain areas like electrification, what does that mean for my finances? How much will I need to invest to gain an X amount of reduction? And then that is part of the bottom one, which is, of course, driving impact. What we really want to do is to drive impact. But to do all of this, you really need to get a grip on all five, the data, right? Data is at the core. So before I give over to Mark, I see that I'm a bit over time. Next steps, I would say, for management is start now. Most companies I've spoken to of the mid-size to large size will have spent somewhat of a year plus to do the double materiality assessment, making sure their finance systems and non-finance systems are in check, and creating the processes and training the people. So use the stop the clock mechanism under the omnibus regulation. That gives you another 2 years to really prepare for this type of reporting. Also, if you're still hesitant, then focus on the no regret moves. So start with the things you know that are going to be there, like environmental reporting is just going to be there. Carbon accounting, scope 1, 2, 3 is just going to be there. So focus on those things. Again, do not assume that by simplified ESRS, the reporting standards, that it makes the reporting easier. It does not. Most of the big things, I would say, complex things in terms of transformation of data are still there. And so the breadth might have been reduced, the complexity has not. Strengthen controls, again, put it in a formalized system. We know record to report systems from finance. And why are they there? Because we've spent the better part of 50 years designing ERP systems, including checks and balances, to make sure that what we report out at the end is also what actually happened. Learn from that. And 5, there's upskilling involved. So, but that does take time. So do not neglect the training. And I will give over to Mark to show you exactly what we mean by formalizing these types of systems and processes. Thanks.
Thanks, Remy. So let me share my screen. So there we are. Yeah. So welcome to this brief introduction on Oracle EPM Cloud for Sustainability. And let's start talking about how a high-level ESG reporting process could look like. So Oracle brings the full process control from connecting and collecting information from various sources to preparation, transformation, and calculation using the carbon calculators with the ability to model and align, review to explore, and also important, thinking about the future with predicting and planning capabilities to measure our impact around sustainability across the organization. And lastly, also very important, to be able to report it out to the internal and external stakeholders. And as you might maybe understand from this high-level overview, this also looks much similar to the financial processes that many companies are trusting Oracle EPM Cloud for already for many years. What we want to do here is turn that same lens into ESG reporting. So let's step into the solution, which has been designed according to some guiding principles. This has been built by Oracle. It's also used by Oracle to report their sustainability results to the stakeholders. But it's also already adopted by many companies and also many to follow, which are currently in the implementation phase. The solution is agile and extensible because it is a new but also changing requirement. And it has been built using a standard EPM design and functionality best practices according to a foundational bottom-up process. So it's not top-down reporting led. So it will also be able to support all frameworks like CSRD, GRI, SASB, IFRS, SAC, and it can be extended. It is using a common conversion dimension, including a greenhouse gas protocol calculator at the heart with flexibility, and the solution has been validated by ESG practitioners at Oracle, but also from partners. So we have landed here at the front page, and we are able to set up multiple navigation flows to guide the users through the whole process. And we are going through this demo as a controller who wants to step through the entire control and governance process around ESG reporting. And we might want to start with reviewing our emissions, where all of our environmental aspects are coming together. So we can here start understand what's happening across the organization. So we can maximize these dashboards and we can drill into the data via self-service dashboards. And I can see, for example, what's happening into the fugitive emissions, for example. So I can restore this in the original size, and we can do that for any of the other scope positions. But the question here is, how do we get to this point? Well, we do that with control, and we can think about enterprise data management at the start. What kind of metrics do I want to use to govern and control across all of the systems in the entire process? Delivering those metrics once and then push it to the ERP systems, supply chain management systems, procurement systems, and then finally also in this EPM capability. We might want to understand all of our cycles, reporting cycles, and the compliance. How are we completing those? Where are the bottlenecks? What tasks do I have been completed? So we can see that here, for example. Are there any tasks that have raised alerts? And all the time I'm being able to interact with those to see where we stand in the process and understand what's happening. So we can do that through task-generated processes. We can look at this from a Gantt chart perspective, for example, where we can easily see the dependencies between all of the tasks. So we can run these lists month over month to create a end-to-end process broken down in several steps. We can see who needs to execute on those tasks, when should it be done, which tasks have been run already, and we can interact with each of the tasks so the users will be guided through the process where he or she can do the job. And from here, we can understand the workflow. We can understand which compliance questions have been answered or need to be answered. We can start communicating with the teams. And very importantly, of course, auditability to understand what's happening in the process. So great visibility on who is doing what. And there's also integration with Microsoft Office, so email notifications can be sent out, and all of that is there to make that process efficient. We can integrate data where we have it available for ESG reporting. And this is, of course, a maturing area. So we have data maybe in our ERP systems, supply chain management systems, or HR solutions, maybe in flat files or potentially in databases or data warehouses. And we can gather that data via this mechanism with data exchange, where many companies are already trusting this technology for their financial data. And we can use that also for ESG data with drill-through capabilities. So I have a direct connection, for example, with Fusion ERP Cloud. So we loaded that data from a carbon ledger. And from here, when I right-click, I can drill through to the source to understand where the data is coming from. So directly, we are now redirected to the source data. And of course, this is Oracle Fusion Cloud, but we can do this for any source. So we are able to control that whole piece. So let's focus now on ESG in particular, at the environmental aspect, broken down for each of the scope areas, as you can see here below. So we have our factor libraries built out, whether that is for location-based factors, market-based factors for scope 2, purchase goods and services for scope 3, factors, spend-based factors for scope 3 as an example. Well, here we are using the DEFRA, but it can be EPA as well. We have the ability to source them, again, integrated from our source. And while we can't do that yet automatically, we are able to input these directly and put security on them where needed. And of course, everything that we load into the system, it's auditable. So we can always see who is doing what, when, and what was the old amount and what is the new one. So if you have our location, our factor libraries put together, we have business-led capabilities here to choose which factors from the factor library we want to use for the further process to calculate via the carbon calculation process. Same for scope 2 and scope 3 controls. And we are also able to map our facilities into the legal entities, but also by line of business. So let's then step into the scope processes. These all follow the same steps. So let's focus on scope 1 again. So I need to gather some data. I integrate it where I can do that via the previous processes, and maybe in an automatic way. But we can also, where we do not have that data available somewhere, we can do that via forms. And these forms we can also open up via Smart View. So it will be able to open up the input forms in Smart View, so we can copy or type in the data here and submit the data directly into Oracle EPM Cloud for Sustainability. So we can rapidly upload that data into the solution. So here we can then start to understand the data that has been loaded. So I can also see if any of the factors are missing. And business can then, with the appropriate access, choose from the factor libraries which factors that we want to use. And also note here on the left-hand side of the screen that we can't change the data because this is being based on the factors that we have set. We can do the same thing for mobile emissions, fugitive emissions. and I have then all the data being loaded, available by facility. We can drill into the data if we want, but we can also bring some topside adjustments here at any time, and we can bring in commentary there, upload attachments if you want to, maybe to explain for what those adjustments are for. And then I can run my carbon calculator process because I have my source data, I've applied and set the factors that I want to use, and now I want to convert that data into tons of CO2, for example. Again, drillable, again, also the ability to put some topside adjustments, and all the time being able to drill into that information to see what's happening across the entire organization. And that ultimately allows us to look at the scope 1 totals. So here we are able to drill in the data to understand the scope 1 information as it's being calculated by the greenhouse gas calculator. So at any point in time, we are able to focus on a particular area of interest and understand what is happening in a self-service manner through those dashboards. So in summary, we stepped through this process for scope 1. We uploaded the data via files or direct connections or via forms, reviewing it, ensuring that we are using the factors that we want to, process it through with adjustments where needed through the carbon calculator to be able to see the output results. Similar process for scope 2 and for scope 3 data. But we also need to think about the social and the governance data, of course. How do we get all the rest of the metrics to cover the social aspects? So here we can gather data which is about employees. And if I scroll down, we can also data for health and safety or training hours. And all of this, again, inputable based on security, but ideally integrated, of course, via your HR systems. But if not, we can start to look at these forms, open up in SmartView and bring the data there. Same for governance data and metrics, and also biodiversity. And lastly, we want to gather all other data that we require through the sustainability templates. So that can be financial data, maybe that's already sitting in Oracle EPM Cloud, or other disclosures, or data related to water, pollutants, and waste. But it might also be that you have already prepared data that already went through a carbon calculator external to EPM. In this solution, we are able to load that data as well. Again, this could be integrated or can be captured via forms. And I can easily, in those forms, change to look at different outputs. So here we are looking at people in the organization, but I can update the point of view over here to change that view. So we want to look at people in the value chain. So instantly, the screen will be updated. So rapid, easy to use, business-owned capabilities. So now I have had the foundational basis, but now I also want to plan forward, which is a huge part of sustainability and ESG reporting, thinking about the future. So here we are, for example, maybe for the first time, be able to release auto-predict capabilities on ESG data. But also importantly, more user-led capabilities where we can thinking about predictive planning. So I can use these capabilities. If I have historical data available, I can start the predictive planning capabilities. So based on historical data, through different prediction models, we can look at some information here, how accurate are those methods, and we can maybe paste these predictive values as a starting point to build our plans. But also important, if you think about planning, is to bring in initiatives. So let me make this bigger. So we can create initiatives for renewable energy, like solar panels or wind generators. And we can then also see the impact on our scope 1 usage and being able to plot it out over time. And that is similar to the other scope areas for the emission part of ESG reporting. And lastly, of course, if you look at the sustainability templates, gather the rest of the plan data going forward. Again, potentially using predictive planning capabilities to populate our plans at the first instance. So now we have built based on the historicals, but we also built our plans forward. But we can also analyze that data any way you like. So we started off this demo with looking at this dashboard, and we have seen already a couple of other dashboards. But we may wish to look at some of our social metrics. So here we have the ability to look at our employee data broken down in FTEs, but now being presented visually. We might want to look at some employee characteristics, how we are doing on volunteering. So we have some KPIs here on the top, how we are doing on giving, training hours by gender. So these capabilities are there. So now we have, let me go back here. Yeah. So we have now built that foundational solution, and we can also start to look at some formal reporting over here. So with simple prompts where we can decide what years do we want to see and what are the comparatives that we want to compare it with. We can run a hugely comprehensive report. And this report we can run for any legal entity. So we can select that here from the drop-down menu, but we can also look at it from a calendar year or by a fiscal year. We can export this data out in Excel, HTML, PDF, but we can also open the tables via the Excel add-in and start to slice and dice in the data if we want to. So if you scroll down here a bit, we can start to look at the location-based data and also note here all the reporting standards that we can report against. But the solution doesn't stop here. So we can also look at the framework-based reporting. Again, here we can select what data that we want to look at. And we can also have a look at the framework-based reporting, such as the CSRD. And again, here we can see the data populated, but exactly how the CSRD is requesting that data, splittable by entity or by line of business, and also according to different output mechanisms. And lastly, a report that really demonstrates also the foundational piece is the multi-framework report. So here we can look at the data coming out in a CSRD format. But here we can simply choose also if you want to look at the data from a GRI perspective or of any of the other reporting standards if you want to. Until now, we have looked at the quantitative aspect of ESG reporting, but the solution is also able to support the qualitative aspect. So here we are able to manage via drop-down menus again, which questions should be answered by which entities. Then we are able to answer the questions and report those out in reports as well. And with this, we can compare years over years. We can maybe copy the answers to the next year to have a starting point. And even further, it doesn't stop here. We also want to be able to put together the qualitative and the quantitative information together through a proper author review and sign-off phase. So we are bringing together the information that we have been looking at, but now we can also bring in commentary and all the other aspects from the teams, all variabilized. So we can run this cycle over cycle. So we can update the periods, ensuring that the commentary and the data is updated in the reports as we are looking at. We can include intelligence narration capabilities. So now we have pulled that report together with a cover page, for example, table of contents, a message from the CFO, and then we can bring the narration, but also the data from the solution, including graphs, commentary, etc. And lastly, I want to show you what can be really interesting in the ESG area, and that's what we call intelligence performance management insights. So AI and machine learning, pattern recognition, is scanning your data and telling us the areas where we should look at. So here we have 52 insights. So let's focus on the first one as an example. So it seems that there is some anomaly has been detected in the data that we have collected for medium cars, hybrid cars in the Netherlands. Whether this is actually wrong or not, think about what it is doing. It's looking back across the data and it's saying that there is an anomaly in the miles driven with the medium size hybrid cars in the Netherlands. This could be a data issue, but it could also be an indication that we have some problem somewhere. So here we can look at the insights generated with AI, explainability on this insight. We can bring in comments or open this as an ad hoc to immediately interact with the data to see what's going on. So what we have seen throughout this demo is that Oracle EPM Cloud for Sustainability, that we are able to deliver full control in the process. It's foundational bottom-up build of the data that allows us to do the analysis, but also reporting and insight across the organization. So to wrap up, in a summary, the solution is here to deliver some innovative capabilities for ESG reporting, like predictive planning, intelligent performance management insights. We saw real-time self-serve drillable dashboards. Reporting templates are there in the solution, and also the capabilities where we bring Microsoft Office together with the data with the ESG reporting. So this solution is really configurable, designed for the end user to be able to control the end-to-end process. So we can really understand where we get the data from, being ingested into the solution, to financial reports, reconcilable, auditable at any point, providing not just something for now, but the solution can grow over time with the changing requirements and also the changes in your organization. With rapid time to value, we think that we can reduce the ESG risk for your organization, not just for now, but also in the future. So thank you very much. So let me bring back the word to Arjan.
Yeah, Remy has the slides, but thanks very much for the demo, Mark. But I also want, we still have a couple of minutes left, so we can also go through some questions. I think some of them came in a little bit earlier than you've been able to show them in your demo, Mark. One of the questions was about external emission factor providers, if we can collaborate with them or get the data in. But I think you've shown, but also feel free to step in, Remy and Mark, that you can get external data from there.
Yeah, I can add a bit more color to that. So the tables within EPM are quite flexible. Many of our customers actually use different sets. So whereas you might be in the UK, you're going to use DEFRA as an emission factor set. EPA is, of course, very US focused. Some use a mix thereof. And some industries have very particular sets, and these are most often with specific providers like Sphera, Climatic, etc. We can work with all those database, I would say, companies to actually ingest those emission factors if needed. And even with Climatic, we have a strategic partnership. So if a customer of ours on EPM really wants to use Climatic, we can even use that to call upon a simple API. So make it even more integrated as a structure. So yes, very much possible.
Perfect. If you are also using Oracle ERP Cloud, does the other parts of the Oracle Cloud applications also support capturing those data?
Yeah. Oh, sorry, jumping in, Mark. You want me to take this?
Oh yeah, go ahead.
Okay.
Yeah.
Yes, they do. If you think about it, we have some foundational applications that really sit at where the action happens. For example, Oracle Transportation Management, which is of course very much in the logistics area, that is already be able to look at your routing, look at your mode of transport, etc., and be able to map those to an emission factor and calculate it and share that data with EPM. So that is, for example, within logistics, a very good solution to use if you're really interested in that part of your footprint. But there are others. Many of our customers, their biggest problem is, of course, scope 3, and namely purchased goods and capital goods. So everything they buy from externals or external suppliers within the company. And that is very well managed by Fusion Cloud Sustainability, which sits in our ERP and supply chain ecosystem. So within the Fusion ecosystem, there's a solution that will be able to help you by translating all of the invoices that you have in your accounts payable into carbon or other types of emissions. So again, a very sort of solution that really goes a level deeper to where the action happens, but gathers that data and is readily able to share that with EPM for the reporting, the planning, etc. So yeah.
Thanks, Remy. Question about the usage of AI, but I think you've shown predictions by AI as well, Mark. So I think that question came in a little bit earlier. I'm also looking at the time. If we don't answer your question now, we will get back to you at a later stage via email. One of the questions: if you are running Oracle EPM Cloud already, how does it work with ESG reporting? Is that included or is it something separate? Now, Mark or Remy, I leave it up to you. Who's going to answer that
I
one?
can give this one to Mark.
Yeah. Well, if you have the enterprise license model, it's included.
Okay.
So basically, what you need to do then is ask for an additional pod in your EPM cloud environment. You can download this solution. So everything what I've shown you today is already part of that solution, and you can configure it according to your needs.
Perfect. All right. Yeah, looking at time, there's a couple of more questions, but not ones that we can answer in in 1 minute, I'm afraid. So if your question did not get answered, we will get back to you via email. I'm aware that some of you who joined accidentally got an email that you didn't. There was a small error somewhere, so we're looking into that. But you're also getting an email after the webinar with the option to reach out to us and ask a question. So then for now, I want to thank you, Mark and Remy, for making time available for the presentation and the demo. And of course, want to thank all the attendees for making time available and join us in our webinar. And hopefully see you again next time. Thank you very much.
Thanks all.
Thanks.
Bye.
Bye.